major warning. If this box that I have right here goes, especially after CPI tomorrow or in the next few days, there's going to be a pretty substantial sell-off that will continue down for quite a while. I'm not saying that I very rarely will give you guys warnings like that. I'm not like a typical YouTuber that's out there, a person that's trying to clickbait people. As you can see, if you've been following the channel for a while, or any of you have been subscribed, you know if I do give a warning that there is a lot of risk on the other end of that. And this box right here, this key support level that happens to be around, well, yeah, it is right now the yearly low, is very, very critical, because if this goes, which is roughly below 354.50 on SPY, especially a decisive break below with a few like an hourly candle close or longer below it, this can lead to a lot of sell pressure, because this is a very, very critical support. So you do have to be very, very careful, especially with an event like CPI coming out tomorrow. This can skew it. Even if CPI doesn't do anything, you need to watch this level going forward, whether CPI is flat, up, or down. Just continue to watch this range, because this can lead to a lot of extensive sell pressure after. And not only is this a key level on the SPY chart, the VIX is something I've been watching very, very carefully now since we broke above this key trend line back on October 7th. This was critical because this was a big break of a trend line that went down across, and you can see once it broke above, we stayed above it, and then we had a big gap up the following day. After that big gap up here, we've consolidated in this 33 to 34 range. It is very difficult for VIX to be able to stay up around the 32 to 34 range for this amount of time. Typically in the past, you can see right here, we get up to that level and then fall down, and it retraces back to at least in the 20s. Same exact thing has been the case, even if you go all the way back to back here, you can see very similar outcomes. We were up here for maybe a few days, and then we fell down right off of it, tried again, and then kept falling down. This is not a level that it likes to stay around, or it is capable of staying around for a long time. So we're going to see what the eventual outcome is very, very soon, because it typically has a hard time staying up here. And as of now, this is a cup and handle pattern on the 15-minute chart, and a cup and handle is bullish for whatever pattern it is sharing here. So in this case, it'd be bullish for the VIX, which in turn would be bearish on the S&P 500. Another thing I want to show you guys, technically speaking, would be Apple here. I've been mentioning this one for months now as we've been in this channel. I'll actually go to the daily chart to give you guys a better picture of it. But as you can see, we've just been getting hammered on Apple for the past few months now, as it went down below during this like channel that it's been in. It's hit the top resistance and then hit the bottom support right here and continuously fell down. Now we are smack in the middle of it, a little bit on the lower end. However, this support here, it looks like it's trying to act as a magnet as of now. If we do have hot CPI, or we sell off after CPI tomorrow or a few days after, whenever that may happen, this is going to act as a key support, because I'll go back to the 15-minute chart here. I've mentioned this before in videos. I think it was the last video. If this support level goes, and we have especially 2 daily candles below, this is when Apple starts to really flush, and we see that yearly low get retested again. Back here, we had a bear bait scenario where we closed below, but then it popped back up the following day. If we get 2 days below in the future, that is very, very bearish on Apple, and that's going to weigh heavily on the market, because Apple is the highest weighting ticker in the market. So that would be a very key thing to look for. Another thing I do want to check out is Tesla. This thing has been hammered beyond belief as well. As you can see, we had the top supply zone that got rejected off for 3 times, as you can see up here. This was rejected in the middle of September. After that rejection, it just continuously fell day after day after day, tons of red days in a row. And now we're around that yearly low level right now. So a lot of people are trying to go long on Tesla for like an extended amount of time. This type of downward pressure is very, very bearish. You may get some relief bounces, especially with short covering, or just people, the sellers getting exhausted as it goes down, but this is not a viable kind of like setup for somebody that wants to continuously go long for anything past 265, thinking we'll get back up above to the supply level. This is actually very dangerous right now, and it is very close to the yearly low, which as of now, the weakness it's showing, whether it has a short-term relief bounce or not, it's probably going to retest this lower end over here. And we did see some pretty decent sized puts at the tape on Tesla earlier today. As you can see here, we had a 1.3 million put for the 200 strike. If you look at where the 200 is, that would be below the yearly low. Now, it doesn't have to actually hit the 200 for them to be profitable, but something to watch for because this one was above the ask as well, as you can see in the order details. And this is a pretty decent size one, paired with the fact that we had a 1.3 million again earlier for 11.18 for that 200 strike. So definitely some to watch. 1.4 as well here. I didn't even notice that before. So yeah, there's a lot of premium hitting the tape on these out the money Tesla puts. Something to look for because a lot of people trying to go long. And if you remember, if you've been watching our videos for a long time, I mentioned the same exact thing with Meta. This is the benefit of just staring at charts all day. And the thing with Meta was a lot of people, after this big gap down over here, were trying to go long with Meta with around like this 215 to 230 range on it, thinking it couldn't go much lower because it was already so far down and they saw a big deal on it. Look at where we are now. This thing is junk right now. It's 127 and it's super, super weak. Just looking at the chart in general, the relief bounces are barely anything. They're just continuously falling down. And people were thinking that it was a deal back up here, if you remember that. Benefit of looking back into history, 215 to 230 people thought was a deal, and now we're at 127. So you need to be very careful just because Tesla has been at incredible levels prior, and it looks like it's super oversold right now. It doesn't mean that it has to be a viable long-term outcome. Again, there could be relief bounces, but I don't want to play against the trend right now. This is something that's very dangerous, at least looking at Tesla, so do be careful around that, as well as what I shared with you with Apple. And I do want to go over to the Qs because both of these are tech stocks. I have mentioned this channel that we have. This channel is basically everything for right now in terms of the midterm structure. We have the top resistance over here and bottom support, and right now we are right in the middle of this. CPI can be very dangerous because we are below the previous yearly low of 270, as you can see here. And I could draw a line for you guys. This is a key pivot because it was the yearly low for a while, right around that 269, 270 range, and we are below it right now. So as long as we stay below it, it is subject to more bearish emphasis, which you need to watch out for, because if we do have a lot more bearish emphasis coming in here, this is something that can continue down a lot because the next support is a lot further down. Does it have to hit the next support? No. But as of now, this is the current channel structure that the tech is in right now. So this is something that you need to watch out for because a lot of people think, oh, the market's so oversold this year, it can't go any lower. Well, according to just this channel in itself, and the fact that we're below the yearly low, if things start to get pretty dicey in terms of the market in general, this thing can start cracking down on lower levels like 240. So again, need to be very careful. And I may sound very bearish in this video, but we've been seeing these puts hitting the tape for so long, and on SPY, charts look very, like I'll show you over here, they look very weak in general. If we go to SPY over here, I know I have a lot of lines, but you can see SPY has been continuously rejected along this trend line, going all the way back to where we had that big pivot high on October 16th. We had a rejection right here. We had a rejection over here. Actually, it went over for one day, which was a fake out. I consider this to be bull bait. It was a fake out for one day above. That's like why I like to wait for 2-day confirmation above a level to go long or short. But we had one day above and then big gap down. So this was rejection. The second rejection up here, and then the third rejection was recently in early October where we got rejected off of. And this was key because we had a form of a relief bounce, but it only lasted for 2 days up. We had consolidation after for 2 more days, but it was only a 2-day bounce. That shows me that it's pretty weak. It wasn't like previous ones like back up here where we had 4 days where it squeezed out. It's showing me that this trend is still very bearish as of now. It hasn't really went up to the extremes, at least this bounce up here. So it's showing me a lot of weakness. And right now, this pattern, a lot of people may think, oh, this is a double bottom, but not necessarily the double bottom that you typically want when there's a wider range. The fact that we went up like this for such a short amount of time and then fell back onto the support is not good at all. Typically, before you see larger sell-offs, you see these types of mini bounces off a key support level like we have right here, and then fall back to that support level. And then the second time that it touches it is typically when it goes under and then continues a bit lower. So you need to be very careful around these levels. This is not something you want to mess around with, especially like I shared with you earlier in the video, when VIX is up here like it is. If you were to go long in the future, it's definitely more ideal to wait for volatility to calm down. You don't want to be trying to catch the bottom of this because the bottom can keep going lower and lower and lower, as a lot of people have noticed throughout this entire year. Plus, overall, we still are seeing these puts at the tape that are like pretty far, whether it be in the money like this one or out the money like this one over here. This is a substantial print we saw at 346 Eastern, 335 335 strike for this 2.3 million in premium for 10/28 expiration. That is a close expiration, first of all, with a pretty far out the money strike. And on top of it, you can see in here, this was above the ask, as we have it highlighted here on Cheddar Flow. This is a very large downside bet from this person, and this is a very rare print to see. We've seen a couple of these now in the past few days, so this is something that you need to watch out for, these types of prints, along with the fact we saw these 3.8 million, 1.2 million, 7.3 million, etc. These were in the money, so not as not as directional, at least for the downside, compared to this 335 one, but they're still puts, nonetheless, kind of betting on that downside move. And throughout the day, we saw similar in the money ones, and even earlier, we did see a pretty substantial one, which is right over here for this 342 strike, 1.0 million for the 11/18 expiration. So pretty consistent throughout the entire day. And yeah, overall, you just need to be very, very careful going forward with a lot of this bearish emphasis. And I know a lot of people think, oh, there's so much bearish emphasis, we have to squeeze. It does not always have to be like that. You have to always make sure, even if you believe that there will be some form of bounce, you have to make sure that your risk is mitigated as much as possible. And with events like CPI, you need to be very careful because those can bring a lot of volatility and go well past your risk limits just within that one day. So just be careful with it. And ideally, we'll see what happens the next few days. It will be very interesting and very exciting to see what happens over here. But see you guys in the next video.